Hey everyone, it's Sean from Predicting Alpha. In today's video, we're going to break down AMD, take a look at the options around it, and figure out what the best trade we can be putting on is. Now, in the last couple weeks, we've seen AMD go on an absolute tear and almost reach meme status with how popular it's become in the retail space. AMD is actually the third most talked about stock on Reddit right now, and for good reason. They've been on an absolute tear. They've released good numbers. They have their acquisition of XLNX. The chips that they're coming out with look phenomenal. There's a good reason why everybody's trying to get a piece of the pie. But as good traders, we need to step back from that situation and not become infatuated with the news and ask ourselves, given the news and the way the market's reacting to the news, where is the real trading opportunity found? Where can I, from an objective perspective, look at the market and find the best way to make money? So let's use our Predicting Alpha terminal, dig into the data, and find the best way to trade AMD. So here I have AMD pulled up. Let's get rid of the scanner for a second here. And basically, we're looking at all the different option data for the stock. Right off the bat, we can see that the implied vol for the 30-day options is about 53%, and our statistical forecast is about 55%. So off the bat, options aren't really looking cheap or expensive. Right? And that's always what we want to think. Are these cheap or expensive? But at first glance, it looks pretty fair value, with our forecast being very similar to what the market is telling us. Not really big enough for us to make a trade. But why don't we dig a little deeper and see what's going on with the implied vols for different expirations and how the realized vol is moving as well. In the last month, we can see that the IV for 90-day, for 30-day, and the realized vol all sort of float around the 35 to 40% range. But ever since we caught that bid in the last week, we're seeing the IV30 spike up to 64, the IV90 spike up to 55, and realized volatility has just been on an absolute tear as well, with the stock being up 18% as of Wednesday and then back down 5% on Thursday. Just an absolute roller coaster for the stock. So it makes sense that we're seeing this spike in vol. If we come down a little, we can also see some other pretty cool things. Taking a look at the option volume here, taking a look at the last month here, we can see that there's usually a good amount of call volume relative to the put volume. But in the last week or two, once again, huge spike, seeing 1.5 million calls being traded on August 4th relative to just 577,000 puts. Now we've seen volume come back down a little bit today, but given the retail sentiment, this bullish sentiment in the market, it makes sense that we're seeing this huge call demand coming in on AMD. Now with all these calls coming in, it would also make sense if we saw a change in the skew. Right, so check this out. We take a look at the skew over time here. And for those of you that are unfamiliar with skew, feel free to send me a message. Just shoot me an email at sean@predictingalpha.com, and I'll be happy to link you a video that we did. It's actually one of the private videos we did for the community, but I'll be happy to send it over to you, and it'll teach you exactly what skew is and why it's such an important concept to understand. So check this out. The skew usually floats around a level of 0.3, 0.1. And then in recent times, boom, we see it drop to negative 2.87. And obviously that might have been a little too crazy, so it's come back a bit to minus 1.21. Now it's not completely uncommon for us to see call skew like this on AMD. As you can see earlier in the year, we did have periods where skew reached these levels as well. But seeing it back down here, it might be worth taking a bet on it reverting back up towards that zero line, where the skew goes from being heavy on the call side to being more on the put side. So something worth thinking about there as well. And we can see that reflected here in the skew as well, right? Skew is all over the place. Market's not very certain about what's gonna happen. But one thing we can see that the market does know is looking at the term structure, the market does expect volatility to be short-lived, right? We can see here on the 10-day options, we have an implied vol level of 61%. Yet out here on the 120-day options, it's just 46%, which indicates to me the market expects this crazy movement in the stock to not last a very long amount of time. So if I wanted to bet on the stock continuing to move, I would probably want to do something a little more short term. So these are a couple cool data points we've gathered if we want to sum this up. Vols are starting to come back down, so having a little bit of short vol exposure might not be the worst thing in the world. We're seeing skew at all-time lows, which means that the calls are way more expensive relative to the puts than they usually are, right? So we're seeing that call and put demand go like this, where the calls are more expensive and the puts are cheaper relative. And finally, the term structure is showing us that the market expects the volatility to be short-lived because the near dated options have such high implied volatility relative to the further dated options, meaning they expect things to calm down as we move out in time. Now, the last piece of the puzzle, in order to really formulate a trade here, is what direction do we think the stock is going to move? Down, up, or not much? And for the purposes of this video, since most people are pretty bullish on AMD, so we're going to structure out a bullish trade in the short term that takes advantage of this call skew, betting on the stock continuing to trend up over, let's say, the next week. And I bet that by taking advantage of this call skew and this level of volatility, we're going to be able to put on a pretty cool trade that'll let us get a high risk reward betting on the stock moving up. A lot better than just outright buying a call or buying the stock. Let's hop over to Thinkorswim and see what we can do. So here we are on the option chain for AMD. Now let's quickly recap what it is we want to actually express in the market, what we want our trade to say. So we want to put on a bullish bet that AMD is going to continue to trend up in the short term, and we want to take advantage of that call skew in some way. So because of that, we're going to be looking at the August 13th option chain, and we're going to be trading on the call side here. Now, a great way to take advantage of call skew and place a bullish bet is a 132 fly, or what we just call it PA. We call it a PA fly. And I have one loaded up here, and I'm going to show you what it looks like. So check this trade out. The easiest way to think about how this structure is put together is that we are buying one near at the money call and financing it by selling 3 out of the money calls. What we're doing from there is going even further out of the money and buying 2 more as a hedge for our position. If we had just bought 1 and sold 3, we would have unlimited risk exposure to the upside, but we can cut that risk exposure by hedging with 2 way out of the money calls. And that gives us the 132 structure. The strikes that I've picked for this trade are 114 for the first one I'm buying, 120 for the 3 that I'm selling, and 123 for the 2 that I'm buying as a hedge. I'm able to put this trade on for 77 cents a lot, which means I could put this on for a max risk of just $77, right? If we drop this down to a 1 lot, we have a max risk of $77. And at expiration, we have a max profit potential of about $515. That gives us a potential reward of 650%, or 6.5 times our risk if the stock lands at $119 by the end of next week. But you can see that we really have a range here between about 115 and 122.5, where if the stock trends up into that range over the next week, we're going to make a bunch of money, right? Even if it trends up to here, we're going to make a pretty sizable return, a 200% return on investment at just 116. Now, of course, if the stock absolutely blows through the top, we are going to be losing $77, right? Our break even on the high side is 122. But here's the thing, AMD is a very big stock. It's unlikely, in my opinion, that we're going to see such a large move. And even if we do, we're able to get such a good risk reward on this trade that we only need to be right 1 out of 6 times that an opportunity like this comes up for us to have a profitable strategy on our hands. Now, just for your own comparison, let's take a look at this relative to just a single 114 call. Where would this need to go to for us to make a 100% return? Right? Let's say we're looking at a 1 lot here. Our max risk on a 1 lot is 325. So in order for us to make $325, the stock would need to go to about 120. You can see what I'm saying here, how taking advantage of that call skew gives us a really cool trade where the stock needs to move up much less for us to get a much higher reward. Because what we're giving up here is that unlimited potential that the retail traders in general are trying to get exposure to, that unlimited upside. By giving that up and selling to people who want that, we are able to express a view that if the stock, more realistically, trends up, we're going to make a really great return on our investment. So let's summarize this trade. AMD is a stock that is being swarmed by retail right now. There's tons of call volume coming in, so there's a bunch of call skew. It's looking like the stock could continue to trend up here. So if we wanted to place a bet on it trending up over the next week, rather than buying a call or buying the stock, we can put on a 132 fly that takes advantage of that call skew and gives us an amazing risk reward if the stock lands somewhere between 115 and 123 by August 13th. Now, if you want to learn how to analyze trades like this, get your hands on your own data terminal, and meet a community of people who are taking that next step in their trading career, all you need to do is sign up for a free trial at Predicting Alpha. You can get complete access, 14 days for free, and there'll be a link down below for you to get started. If you enjoyed this video, please drop a like on the video and leave any questions you have in the comments. I'm happy to help. So thanks a lot for watching, everyone, and we'll see you in the next trade breakdown.